Okay, guys, welcome. This is our lesson that's going to be covering, the indicator that I'm always talking about that's on the bottom of my charts, the TDI, the Traders Dynamic Index. This is going to be a very important component of the market maker's method. And we're going to go through this indicator, and I'm going to show you the ins and outs of it, how to use it to confirm, to confirm your trades, how to use it to basically scale into your positions, when to exit out of your positions, and let's just kind of break down the indicator itself so you guys actually understand it. Okay, so is this a better RSI? If you guys are a little bit familiar with Forex, you know that the relative strength index, that's the RSI. It's one of the most widely used indicators out there, and it's basically based off of closing prices, and it measures market momentum and different, various other different calculations based off of, closing days of the price. If you have it set to 14, it's 14 days of closing prices. So I believe that the TDI does give out better signals and trade confirmations. It's a powerful tool to scale in when it is used in the proper context of the market, right? In line with the market maker's trend, expecting the stop hunt low, a W formation and rise during peak hours, late Asian, London, and New York. Will help build confidence in your trade calls. This is how you're going to start sizing up and trading larger lot sizes. And eventually, this is how you're going to go from a retail trader to possibly an account manager, fund manager, private investor, whatever you want to call yourself. Start trading 25 standards, 50 standards, and make a great living. Will identify divergence easily, which you guys should already know about divergence from some of my other lessons, such as in the cycles and etc. Volatility bands are going to act as support and resistance based on the close, which is much stronger, right? Those are the volatility bands. When the bands contain the RSI line after a break, it is divergent, stop hunt, right? That's where I go through outside the volatility band and back inside. I say that a lot. And of course, when viewed in the proper context, they can identify stop hunts, scale-ins, and exits. Okay, this is basically a slide that shows you you are in the right market segment when the TDI shows this. Price is in the channel, right? It's in the channel. Then the RSI line breaks outside the bands as a stop hunt, right? Shows it breaking out like a shark fin, and it does a break out of the volatility band. And it's during the stop hunt during London gap. Reversal is imminent. You're looking for signals, right? How I say anywhere from 15, 20, 30 pips above the high or low. And you can add to the trade once it breaks the baseline, the yellow one, and the volatility band break still to the downside. And then exit all units once the price line breaks back into the volatility band. So I'm going to show you this to make it more visual. So TDI, it's a hybrid indicator developed for trend direction, momentum, and market volatility. This is the RSI line. This is what an RSI would look like if you just put it on your chart by itself. Very self-explanatory. I told you what our relative strength index looks like and what it's all about. You can also look it up. Then we have the trade signal line that's added to the chart. So this is almost halfway through of what the TDI looks like. The signal line is going to be there to use as once the RSI line breaks above the volatility band and it closes inside the signal line, the red line, right? So when the green RSI line breaks through the signal line, that's additional confirmation that it's a proper stop hunt. Now we have the market baseline. The market baseline is very interesting in terms of it follows very well of having the base of the price, and relative, it shows you where the longer term trend is. So if your TDI is trading If the lines are trading below it, then the segment is short. And if it's trading above it, then the segment is long, okay? So I'll show you in terms of how to use this as more of a, altogether, all-in-one indicator, which is going to show, all the reversal signs a lot easier and a lot better, okay? So notice that every time the market baseline comes to the extreme level, 68, and the extreme level to the downside, 32, notice that it starts to reverse, but it taps it slightly and then it starts trading away. And when every time it reaches the top, most likely you're going to see a reversal. And it shows you this in before any other indicator, right? It'll take some time to reverse the market, but it's going to show you before any other indication. And once you see this, this is where you start lining up like, oh, okay, so we're going to start going long pretty soon. So now I use all my other assets, identifying peak formation for the weekly cycle, et cetera, everything else I learn. So we all bunch everything together. And it's not about one indicator or one pattern. It's about confluence of everything that come with the strategy. Then we have the volatility bands. Of course, volatility bands containing the price act as support and resistance. When you see price come outside the volatility band and the second leg stays inside the volatility band, then you have a great divergent stop hunt trade when viewed in the proper timing and during the proper stop hunt. And of course, then we have the break of the actual signal line and the RSI line trades to the downside. So now what I'm going to do is I'm going to show you how to scale in with this indicator. So note that once you actually have the proper second leg stop hunt contained inside the band, you're entering, of course, on the candlestick. If it's showing you a railroad track or a doji or a hammer. And most of the time when it shows that, the RSI line already breaking through the signal line. So your first trade is, of course, at the candlestick, which could be anywhere around here. But to make it easier without any type of price right now, first entry is once it breaks the signal line. Additionally, you can add to your positions once the RSI line breaks the market baseline. Additionally, you can add more positions once the RSI line breaks down below the volatility band to the downside if we're taking shorts. And in this case, it didn't, but if price continued down and then eventually broke back through the volatility band, this is where we exit all positions. In this case, we didn't get that. We got price coming here and breaking through right away. So we'd exit out here. So let me show you with actual chart examples, and it's going to be more clear for you, okay? Okay, so here we have GBP USD, and this is actually a great example of using the TDI to properly understand how to scale into the position and actually when to get out before the market reverses short term. And it would leave you to have your stop losses hit in profit at break even, or basically not realize any profits, even though you got over 60, 70 pips on this trade. So let me show you here now. Once we have, of course, what do we have here? Of course, we were expecting this based off of where the cycle is. So price comes here perfectly to our stop hunt box, which is 25 to 50 pips above the Asian session. Come here, issues us that pin right there. Look at that pin. That pin doesn't just happen for no reason. That's market makers grabbing the orders up here with a big fat hand. Right? And this, of course, is our M formation. Our entry would already be kind of late there, but it's already fine. A stop loss would be a little larger, right? 20 pips above the high. Or we simply get in right here once we have quarter woods. And I'll go through candlestick patterns in the candlestick section of this course. So notice how we had RSI already trading above the 68 and 63. We had the M formation, and it's showing divergence because TDI is almost level there. But this high, the second leg made a higher high. Okay? Now we had the EMA crossover right here as well. This candle closed beyond the two EMAs, and we could add more positions. And notice how the RSI line, the green line, crosses the signal line right here, which is perfectly contained right there. So now you can see the 5 and 13 EMAs are perfect confluences with the RSI line and the signal line on the TDI. Breaks the, right here, breaks the market baseline, adding you more positions right here. Then it breaks the volatility band to the downside, like I said. Add more positions right here. And then price TDI comes down here, and it breaks back above the TDI, giving us confirmation to get out of the trade right here. Or if you already knew and you saw this candlestick pattern with this two wicks like this, you'd already get out right here. Okay? So I hope that makes sense right there. Here we have GJ. We're going to see two examples here. Okay? And this is going to give you two examples of quite picture perfect stop hunts. Coming here, we had nice push right to the stop hunt box. Look at TDI, showing you nice aggressive shark fin, right? Now coming here, this candlestick pattern, we have 1, 2, 3 pins like this. This is a nice hammer pin right here. This middle candle, nice hammer. TDI breaks back inside the volatility band and breaks the signal line. All that occurs right here after this candle right here. We were not issued a second leg on this trade, but we did indeed have an EMA crossover already occur right here. RSI line breaks the market baseline right here, adding on more positions. Note how the EMAs are already crossed over and trending to the downside. Breaks the market base, breaks the volatility band right here, adding on more positions right here. And eventually, once it comes, right, it's outside and it breaks back inside the volatility band, you get out of all your positions right here. Now, of course, knowing that this was level 1 stop hunt high drop, we could hold this trade if you want to swing it. But I'm showing you the concepts of scaling in and out and taking profits on the TDI. And of course, I mean, look at this. W formation, this is a short-term reversal. This was New York reversal, you could take this. And when you are taking reversal trades, note that you always take profit at the 50 EMA and the 200 EMA. That's it. Then it's going to reverse. Okay, this second example right here. Well, 1, 2, 3 hits to the high. Issue us those 2 pins right there, closes below the 200 EMA. TDI comes outside the volatility band and then back inside. crosses the signal line right here. Look at this candlestick right here. This is a railroad track. This red bearish candle, enter in right there. No hesitation. Stop loss goes about 20 pips above the high. Now we have additional entry points. RSI line, the green line, crosses the market baseline, the yellow line. Add more positions. Oh, look what happened right here. 5 and 13 cross as well. Okay. Then we had price break outside the volatility band, which would probably be somewhere around this candle, or it could have even been this candle right here. Already from here to here, it was already giving you more than 100 pips if you took it right here. Price breaks back to the upside in the volatility band. You get out of this trade right here. And you realized over 100 pips. And then notice how the EMAs then cross back over to the upside as well. And notice right here in this first example, once the EMAs then cross over to the upside, you should have already been out. So hopefully all this makes sense with the TDI, and you're going to see much more of the TDI now once I go through overview videos, going back with the cycle, with the stop hunts, market timing, moving averages, putting everything into context together should really help you understand. Okay, guys, that's going to be it for the TDI. Hopefully that was a nice little general basics foundation of the TDI. And now that you understand this, now when I talk about TDI, influence in context with everything else, now you're going to really, really start looking at this, and it's going to slowly and slowly start opening your eyes even more. And by the end of this course, I guarantee you that it's going to only take you a few weeks and you will be a profitable trader. If not, you contact me and I will make sure that you're a profitable trader. Anyways, this was the TDI. I'll see you in the next lesson. Thanks. Bye.